Welcome to the Daily Business and Finance Show. Market movements: S&P and Nasdaq ascend as Dow hits record 37K. Fed holds rates steady with potential cuts in 2024. Pfizer's low point pulls down vaccine sector, while Apple soars to new heights. Alibaba eyes e-commerce throne comeback amid falling U.S. Treasury yields post-Fed decision. Adobe trips on Outlook and FTC inquiry as Apple faces future challenges despite current success. Stay tuned after this short ad break for an in-depth analysis of these headlines and more. Wednesday saw Wall Street closing on a high note, with the Dow Jones exceeding 37,000 for the first time ever. This surge followed the Federal Reserve's assurance of no additional rate hikes and potential reductions. The Fed's primary policy rate remained unchanged, and a cut of 75 basis points is expected in 2024. Treasury yields experienced a drop after this announcement. Pfizer emerged as the top percentage loser in S&P 500 following disappointing guidance updates.
The Federal Reserve has kept its policy rate steady at between 5.25 and 5.5% for the third meeting in a row, but has suggested possible rate reductions in the coming year, 2022. Even though there's been no alteration in the federal funds rate, the central bank is still decreasing its balance sheet, which indirectly tightens policy. The Fed's position is perceived as dovish due to ongoing moderation in inflation and forecasts of GDP and unemployment rates of 1.4% and 4.1% respectively for the year 2024.
Shares of Pfizer have reached a 52-week low following the setting of its 2024 outlook, which fell below expectations. This has had an impact on other vaccine manufacturers such as Moderna, Novavax, and BioNTech. Predictions indicate that the revenue and adjusted earnings per share of this pharmaceutical giant will fall short by approximately $3.2 billion and $1.20 respectively. Even with the acquisition of Seagen, Pfizer's sales forecasts for COVID-19 are viewed as excessively optimistic.
Shares of Apple reached an all-time closing high, at a price of $197.96. This rise contributed to a wider market boost, fueled by the expected interest rate cuts from the Federal Reserve in 2024. Despite worries about valuation and demand for the iPhone 15, Apple stock has seen an increase of over 50% this year. The technology behemoth is contemplating moving more production from China to India. Additionally, it could face potential consequences following Epic Games' recent antitrust win against Google's Play App Store.
In what has proven to be a difficult year, the leading position in China's e-commerce market has been taken over by PDD from Alibaba. The stock of Alibaba has seen a decrease of 23% this year, in contrast to PDD's shares, which have experienced a significant surge of 74%. Even though Alibaba surpassed earnings estimates, its second quarter results were eclipsed by the cancellation of a spin-off plan for its cloud intelligence group. On the other hand, Morgan Stanley named PDD as their top choice in China's e-commerce sector. Jack Ma, co-founder of Alibaba, commended PDD and advocated for transformations within his own organization.
United States 2-year and 10-year Treasury yields experienced a significant decrease after the most recent rate decision by the Federal Reserve, as well as comments made by Fed Chair Powell. This decline in yields, which enhances bond prices, has positively impacted several major Treasury-focused exchange-traded funds. Even though rates have remained unchanged for 3 consecutive meetings, the Federal Reserve still views a rate increase as a potential option.
Shares of Adobe experienced a 7% decline in after-hours trading, following a less optimistic 2024 outlook and an ongoing investigation by the U.S. government into the company's subscription methods. Even with a revenue surge of 12%, amounting to $5.5 billion in the latest quarter, Adobe's projections for the upcoming year are not meeting expectations. In addition, Adobe is currently in discussions with the Federal Trade Commission regarding potential substantial expenses tied to its subscription services.
The Federal Reserve has revised its plans for the upcoming years. Instead of the previously projected single rate increase in 2023 followed by 2 cuts in 2024, it now intends to reduce interest rates 3 times next year. Despite these changes, the federal funds rate continues to hold steady at a peak not seen in over 2 decades. The updated forecast indicates that rates are expected to fall from their current 5.4% down to 4.6% by the conclusion of 2024, with an additional decrease bringing them down further to 3.6% by the end of 2025.
Apple, currently the globe's most substantial firm boasting a market cap exceeding $3 trillion, is grappling with uncertainties surrounding its valuation. Despite witnessing record-breaking sales and services such as Apple TV Plus and iCloud, the consumer demand for their latest product, iPhone 15 line, remains ambiguous. The technology behemoth is targeting expansion in China and India. However, supply chain disruptions coupled with trade tensions could potentially redirect production from China to India. In 2023 alone, Apple's stock has surged by 55%, marking an impressive 5-year increase of more than 370%. Nevertheless, opinions among analysts regarding its future performance are split due to apprehensions about valuation and growth potential. And that's a wrap on the Daily Business and Finance Show. Until next time, keep investing in your knowledge, and let's shape the future of finance together. I'm Montgomery Jones.
And I'm Amalia Dupre. It's time for us to say goodbye until we see each other again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.